People like to believe that losing millions takes time. Bad markets, slow declines, complicated plots. It's comforting to imagine disaster as a long hallway with plenty of exits. But the truth is simpler and dumber. Sometimes a fortune doesn't die slowly. It falls through a trapdoor built out of one impulsive click, one angry email, one "this will be funny," one "what's the worst that could happen?" This file isn't about unlucky people. It's about confident people, the kind who believed they were too smart, too rich, or too chosen by the universe to ever be the punchline. CEOs who made one arrogant bet. Investors who hit send before checking the address. Lottery winners who treated risk like a personality trait. Tech bros who mistook hype for math. And ordinary people who discovered in real time how fast a lifetime can turn into a cautionary tale. Across 45 cases, you'll watch millions evaporate in a single gesture. A signature on the wrong line, a drunken tweet, a weekend experiment, a casual favor to the wrong friend. Some of these people rebuilt, some disappeared. All of them contributed to the quiet, universal rule of money. It doesn't care how you feel, it only cares what you do. So if you've ever told yourself, "I'd never be that stupid if I were rich," this file is for you. Consider it a guided tour through the shortest distances between set for life and what have I done. Fasten your seatbelt and don't touch anything that looks like a shortcut. One bad move. 1. The cousin's can't-miss tip. He sold a paid-off house to invest in a single, guaranteed startup his cousin swore would disrupt everything. No research, no diversification, just trust and a handshake. The startup collapsed within a year under debt and lawsuits. His cousin moved on. He moved in with his parents, again. 2. The rage tweet that erased a decade. A tech founder, drunk and offended by a journalist's review, unloaded a midnight thread insulting customers, regulators, and investors by name. Markets were open 6 hours later. By noon, his board had removed him, sponsors had fled, and the company's value had shed 9 zeros. The tweets are still free to read. 3. The double or nothing retirement. A conservative engineer spent 30 years quietly building a nest egg, then one night let a friend talk him into putting it all on a single high-leverage options trade, just once. The market twitched in the wrong direction while he slept. By morning, his retirement had become a lesson plan for financial planners. 4. The email with the wrong zero. A mid-level manager approved a vendor invoice, accidentally adding an extra zero to the payment. Instead of $400,000, the company wired $4 million overseas. The vendor vanished, the money followed. His boss called it an honest mistake, and the board called it grounds. 5. The fun experiment with margin. A hobby trader discovered margin accounts and decided to scale up his wins. One bad week turned his $200,000 portfolio into a $600,000 debt. He hadn't realized borrowed money could reverse the direction of ownership. The broker kept his stocks. He kept the lesson. 6. The unverified link. A retiree received an email claiming he'd won a bonus payout from an old investment. The form looked official. The logo looked familiar. He entered his banking details just to see. By the time his bank called, his 7-figure balance was a memory and a case number. 7. The house on the cliff. A new millionaire bought an oceanfront mansion against every inspector's warning. Soil erosion, storm history, insurance nightmares. He loved the view. One storm season later, the view moved several meters closer. So did the edge of his living room. Insurance called it an act of God. Engineers called it an act of ignoring engineers. 8. The NFT of himself. A social media influencer minted a one-of-one NFT of his own face and bought it with his savings to set a floor price. The market didn't care. The token's value plunged. The blockchain kept perfect, permanent record of his self-confidence. He owned a very expensive receipt of his own ego. 9. The secret second mortgage. Trying to help the family, he took out a hidden second mortgage on the house to finance his brother-in-law's business idea. The business lasted 6 months. The bank's patience lasted slightly longer. When the foreclosure notice arrived, his spouse learned about both debts at once. 10. The lawsuit he insisted on winning. A wealthy landlord sued a tenant over minor damages out of principle, refusing to settle. The tenant countersued, lawyers multiplied, and the case dragged on for years. Legal fees quietly outpaced the original property value. When the dust settled, he won the lawsuit and lost nearly everything else. The decisions that aged poorly, instantly. 11. The famous refusal. A CEO laughed in Netflix's face when offered the company for $50 million, calling it a niche DVD hobby. The board agreed. Blockbuster filed for bankruptcy a few years later, and Netflix became a trillion-dollar empire. One decision, one smirk, one obituary for an industry giant. 12. The celebrity who ignored taxes. After a massive payday, a Hollywood star decided taxes were optional for geniuses. The IRS disagreed with cinematic precision. Back taxes, penalties, and frozen accounts drained nearly everything. He now gives interviews about the importance of compliance, a lesson millions of dollars taught him better than any script. 13. The crypto wallet he threw away. A programmer mined Bitcoin early, forgot about it, then tossed the hard drive during spring cleaning. Years later, the coins were worth over $100 million. He begged the city for permission to dig through its landfill. They refused. His net worth now depends entirely on archaeology. 14. The airline tweet. A billionaire investor mocked a regulatory agency on Twitter. The agency responded by opening an inquiry. Markets responded by vaporizing $2 billion from the company's valuation. The tweet was deleted. The loss wasn't. 15. The oil company that said no. A small-time entrepreneur offered a major oil company rights to a new drilling technology for dirt cheap. An executive rejected it out of ego. The same tech was later sold to a competitor, generating billions. The executive retired early. Voluntarily or not remains unclear. 16. The gambler who chased the worst streak ever recorded. A businessman walked into a casino with a fortune and left with a story. He insisted his losing streak had to end soon and kept doubling his bets. 12 losses later, the table limit saved the casino from further damage. His bank could not say the same. 17. The billionaire's free publicity. A luxury brand owner released a purposely offensive ad to go viral. It did, just not in the direction he modeled. Boycotts erupted across multiple countries. Within days, the company lost hundreds of millions in value. He insisted people didn't get the art. They got the refunds. 18. The real estate mogul who trusted intuition over inspection. He bought a historic hotel without reading the maintenance report. The pipes were rusted, the roof sagged, and the electrical system belonged in a museum. Renovation costs eclipsed his purchase price. He sold the building at a loss and his intuition at a discount. 19. The man who sued a bank and lost everything. A new millionaire tried to fight his bank over a minor transfer fee. He represented himself in court with YouTube-based legal training. He lost the case, then the appeal, then his savings to the opposing legal team. His biggest mistake wasn't the lawsuit, it was believing he understood law. 20. The founder who fired the wrong engineer. After a petty argument, a CEO fired the only engineer who understood the company's proprietary code. The engineer left without explanation and without documentation. Within months, bugs multiplied, clients left, and the company folded. The CEO insisted it wasn't his fault. Everyone else insisted it obviously was. One decision away. 20 stories in, and the pattern sharpens. People don't lose millions slowly. They lose them suddenly, stupidly, decisively. Just one moment of arrogance, one burst of emotion, one reckless instinct, and entire fortunes collapse under their own confidence. Money doesn't make people smarter. It just raises the cost of their mistakes. The self-inflicted collapse. 21. The man who insured his own luck. A lottery winner bought an absurd luck insurance policy from a shady financial guru who promised spiritual risk protection. The premium? Half his winnings up front. The policy covered nothing, violated several laws, and collapsed within weeks. The guru vanished. The winner learned the universe doesn't reimburse faith-based stupidity. 22. The actress who said no to streaming. Offered a back-end deal on a new streaming show, she demanded upfront cash instead, calling streaming a fad. The series exploded globally, generating hundreds of millions of us. Her buyout amounted to 0.02% of what she could have earned. She now avoids interviews about career strategy. 23. The art collector who didn't check authenticity. He spent $12 million on a lost masterpiece because the seller said its energy felt ancient. Experts later confirmed the paint was from the 1990s and the canvas from IKEA. His only consolation? The fraudster went to jail, and he kept the painting, now a monument to optimism. 24. The crypto trader who clicked the wrong coin. He meant to buy a rising altcoin, but clicked a nearly identical ticker, one with zero liquidity and no project. His $450,000 transaction triggered a flash pump, then froze permanently. He didn't just buy the wrong coin, he became its entire market cap. 25. The CEO who bought a yacht during a bankruptcy hearing. He thought no one would notice if he purchased a 40-meter yacht through a shell company while the business was collapsing. Investigators noticed. The yacht was seized, creditors retaliated, and the CEO became a case study in corporate greed taught at universities worldwide. 26. The millionaire who sued Wikipedia. Upset by a mildly inaccurate biography, he sued the platform for defamation. The lawsuit drew global attention to the inaccuracies and uncovered far worse truths about his business dealings. The stock tanked. The lawsuit was dropped. The damage stayed. 27. The hedge fund that trusted a single spreadsheet. A junior analyst accidentally deleted a formula, turning a high-risk investment model into a fantasy. The fund made massive moves based on the broken sheet. When reality corrected the math, the fund lost billions. The analyst quit and became a baker. 28. The guy who treated real estate like poker. He liquidated his portfolio to go all in on a single mega mansion he planned to flip. The housing market tanked within months. Buyers vanished. Maintenance alone drained 7 figures. He lived in the mansion alone, calling it the world's fanciest reminder. 29. The influencer who forgot taxes existed. After earning millions from viral videos, she assumed income tax was an American thing. She lived abroad. Unfortunately for her, so did tax treaties. She owed nearly everything she had. Her tearful apology video became her most viewed upload. 30. The charity founder with zero accounting skills. A philanthropist launched a multi-million-dollar charity but refused to hire accountants, convinced he could track it all mentally. Misallocated funds, mismatched reports, and missing receipts triggered a federal audit. The charity dissolved. The IRS didn't. Ego is expensive. 30 stories in, and the truth becomes painfully clear. Fortunes don't fall because of fate. They fall because of confidence without competence. The richer people get, the more expensive their impulses become. One decision, one slip, one fantasy treated like math, and millions evaporate like steam. The universe doesn't punish stupidity, it just invoices it. The $1 million self-destruct button. The heir who turned down a fortune for a dare. A bored trust fund kid accepted a friend's challenge to live authentically by renouncing his inheritance on livestream. The clip went viral. His family took him at his word. When he begged to undo it, the lawyers simply replied, "The internet never forgets." 32. The engineer who forgot to hit save. A contractor working on a major infrastructure project manually recalculated a budget file, but forgot to save the version with corrections. The project launched using outdated numbers. Overruns ballooned past $100 million before anyone realized the culprit was a missing click. 33. The billionaire who bet against the wrong rumor. He shorted a company after hearing a confirmed leak that turned out to be a meme. Internet traders noticed and intentionally pumped the stock as revenge. His position bled tens of millions before he closed it. The meme survived. His pride didn't. 34. The celebrity couple who trusted a psychic with investments. At the height of their fame, they funneled millions into ventures recommended by a spiritual wealth advisor. The advisor vanished after receiving the wire transfers. Their careers survived, their bank accounts did not. 35. The CEO who ignored cybersecurity. He refused to update the company's aging security system because hackers don't target us. Weeks later, ransomware locked their servers. Paying the ransom cost millions. Not paying it cost more. Investors fled. The CEO resigned with a password he would never forget again. 36. The man who tried to smuggle cash by mailing it to himself. Hoping to avoid taxes, he stuffed nearly $1 million into a package and mailed it across state lines. The postal machine flagged the density as suspicious. Authorities seized it instantly. He tried to claim the package. They claimed his freedom. 37. The producer who bought a fake script. Convinced he'd discovered the next Star Wars, he paid a small fortune for script rights from a charming stranger. The script was AI-generated nonsense. The stranger was gone, and Hollywood got another cautionary tale about trusting vision. 38. The politician who clicked the wrong attachment. A high-ranking official opened a spoofed email that installed malware across government systems. The cleanup cost tens of millions. When questioned, he said, "The file said urgent." It was, just not for him. 39. The man who invested everything in rare water. He was convinced that future scarcity would make bottled, pure glacier water a billion-dollar market. He purchased an absurd stockpile and leased warehouses. The water spoiled. Investors sued. The glacier outlived the company. 40. The millionaire who fired the only person who told him no. His CFO repeatedly warned him about reckless spending. Tired of hearing, "You can't afford this," he fired her. Months later, without restraint, he purchased jets, art, cars, and land. Bankruptcy arrived like a politely scheduled storm. 41. The crypto exchange CEO who moved funds temporarily. He used customer funds to cover a personal margin call, intending to replace them the next day. The market dipped. The company collapsed. The court transcripts now outlive the fortune he once had. 42. The sports star who trusted a single friend with everything. He handed his entire financial portfolio to a childhood buddy because he's loyal. The buddy wasn't trained, licensed, or competent. One bad investment wiped out decades of earnings. The friendship didn't survive either. 43. The billionaire who tried to manipulate his own stock. He attempted to inflate share prices with a bold public statement that had no basis in reality. Regulators intervened, the stock crashed, lawsuits piled up. The stunt cost him more than honesty ever would have. 44. The collector who destroyed his own fortune by cleaning it. He bought a set of ancient coins worth millions and decided to polish them for display. The abrasive cleaning destroyed the patina that gave them value. Experts estimated he erased 90% of their worth in 10 minutes. 45. The investor who forgot his password. His digital wallet held tens of millions in crypto. He wrote the password on a sticky note to be safe, then accidentally threw it away during a move. After exhausting every attempt, the wallet locked forever. He now lives with the knowledge that his fortune still exists, behind a door he welded shut himself. Fortune has no patience. 45 disasters later, one truth stands undefeated. People don't lose millions because of fate. They lose millions because confidence outruns competence. Money amplifies instinct, and when instinct is foolish, amplification becomes obliteration. Every story in this file follows the same pattern. One moment of certainty, one thoughtless decision, one irreversible result. We like to imagine we'd behave better, but history and human nature disagree. The Absurdist Files, Signature Close. This has been The Absurdist Files, File 006, 45 Ways People Lost Millions Through One Stupid Decision. A cinematic archive of fortune, hubris, and the gravity of human error. Because stupidity is cheap, but its consequences never are.